Good morning, investors. Welcome to another TipRanks webinar. It is fantastic to be with each and every one of you yet again this Wednesday. If you are brand new to our webinar series, I'd like to welcome you here, and I'd like to share with you that my name is Ari Gutman. I am the Customer Success Manager here at TipRanks. Every week, jumping on with our premium and ultimate users on Monday and our basic users on Wednesday, all to do one thing, and that is to help all of our users as we roll into 2023. I love to see some familiar names and faces that are joining us again here on the webinar. It is always amazing to see community members coming back to join us. Now, for those of you who are new to the webinar, I'd love to start off by just sharing with you what we do webinar to webinar. Let's paint a bit of our economic backdrop, talk briefly about what's going on in the market, perhaps what we can expect in the coming days, and then we roll into a couple of the features, new updates, or a tool of the week that we have highlighted for our community members here at TipRanks. So I want to start by sharing that last week we ended in red, and this week we actually opened in red the other day on Tuesday. It is a shortened week when it comes to the market. Now, we had yesterday both Walmart and Home Depot come out with earnings, and unfortunately, those earnings were not so hot. I believe both Walmart and Home Depot allowed investors to get a better gauge on where the consumer currently stands right now and how the consumer is feeling, which I don't know about all of you out there, but I am certainly looking ahead, feeling a little bit pressed and trying to understand to the best that I can what may be coming about in the next 6 months to a year, because there has been a lot of economic information that has been put on our table as investors for us to analyze and review and digest. Some of it could be a little bit daunting if you're not too familiar with economics or investing and you're listening to the headlines. But once you start to jump on with us webinar to webinar, I always like to say that economics could be pretty boring. Peter Lynch said it best, that you can study economics for 13 minutes out of the year and you'll have just wasted 12 minutes. And now I share that because if we go back about a couple months ago, we had economic data that came out, didn't look so hot. Leading up until this very moment, I've been sharing with you that our economic data hasn't been looking so hot. So what exactly hasn't been looking so great for us as investors, or even really just as consumers out there? I want to go back to a few weeks ago when we had the jobs report come out, and we had 517,000 jobs that were added to the US economy. Then we had stats that came out in regards to our unemployment level right now, which is at 3.4%, essentially at a historic low here that we haven't seen since 1969. All in all, we have a very robust labor market, which gives leeway to the Federal Reserve to continue to hike interest rates as they see fit. Now, what's been interesting to listen in on is Jerome Powell's words, especially when he was in Washington not too long ago, speaking at the Economic Club in Washington. And he had shared that he foresees the Federal Reserve is essentially foreseeing a bumpy road ahead. Now, political terms for, in my point of view here, for really volatility ahead, volatility that we can expect. And I'm not 100% so sure about a very soft landing. So what I always like to say is to be prepared for the worst. Of course, we're always planning for the best. Now, it was also very interesting in listening to Doug McMillon, that's the CEO of Walmart, the other day as Walmart presented earnings, was his words on Walmart being a great stock and a great opportunity for investors out there, essentially because regardless of where the economy goes, up, down, anything there in the middle, Walmart is going to be the one store, really, we're thinking this big retailer that consumers will go to across the board. And every time Doug McMillon speaks, I like to listen in because he gives good insights. We have anyone from lower class, if you will, to upper class, and anyone in middle class that really goes to Walmart. They shop at Walmart, it's the biggest employer within the United States. So there's always a lot of insight that Doug McMillon gives. But when he was sharing yesterday, what caught my attention was how he was talking about consumer trends. And so Walmart, of course, missed on their earnings. Again, that's sharing with us that it's not just at this point in time looking like just the lower class, middle class is becoming penny pinched. upper class as well. And that pinch is being felt across the board, and most likely in preparation here for what's to come. So this all leads me now to TipRanks and how TipRanks can come into play for all of us as investors in preparing for the worst and planning for the best. Now, I will say that the tools I want to go over today are going to be anything ranging from the screeners that we have on TipRanks to a brand new tool that is just rolled out. It's actually its own tab, which we're going to jump into in a hot second here. But I will share with you that it's all about stock ideas when it comes to TipRanks. I want to say that again. It's all about stock ideas when it comes to TipRanks. We're not necessarily here to say, here's the stock that everybody should buy. This is a 10x opportunity. Jump in on it. We're here to say we want to empower each and every investor out there to do your due diligence, especially right now when the market and the year ahead looks very uncertain for us all. And if the Federal Reserve will continue to hike interest rates, the big question we have to ask ourselves is what exactly does that mean really across the board for companies and sector by sector? What we could expect with higher interest rates is more companies experiencing some more turbulence, perhaps layoffs across the board throughout different sectors. I don't share that to scare anybody out there. Again, if you're brand new to investing, that could sound pretty alarming, but just keeping in mind market cycles, what happens when interest rates go up, how companies are actually impacted by higher interest rates. And from there, we're now asking ourselves questions as investors. Well, what companies do we get invested in? What sectors should we be looking into? And this is exactly now what is going to lead me into the features I want to go over now and the tool of the week that is just rolled out. So bear with me as I share my screen with all of you. And I want to take you guys over to research tools. And I want to have a scroll down here to where it says stock screener. So here we are. We have right at the top stock screener, easy to use screener with unique signals and data. We see a comprehensive overview of stock performance. So what exactly is this stock screener? What can we do with this tool that we have on TipRanks? Well, essentially, as I shared, if TipRanks is that place that you as an investor can come to and look for stock ideas, bearing in mind that economic backdrop that we had just painted, we can really start to filter out stocks that we don't want to look into right now and stocks that may be great ideas for us to add to our stock watch list. And if it makes sense to do so for our investment portfolios, then actually transact and add that position to our portfolio. So just to run you guys through how I would essentially use this tool here, our stock screener. If I were to sense that there's going to be more volatile time ahead of us in the next 6 months to a year, I'm going to be looking for companies that are essentially going to meet 3 pieces of criteria for myself. Number one, a company that is well capitalized, that has great management, and last but not least, a company with a strong brand name. So depending on your investment style, you may have different criteria, but I'm a long-term investor. I actually use market volatility to my advantage. However, as a long-term and dividend investor, I do personally like to look at mega, large, and medium stock companies. So I've just filtered this list right off the bat to mega, large, and medium cap companies. And I'm going to continue to filter through for what exactly I'm looking for. And I'm going to go to the right-hand side here to sector. We get this drop down. And we have different sectors across the board. Now, just for the sake of today's webinar, I'm only going to click on 2 here, but bearing in mind our economic backdrop, I'm going to be looking into sectors that I personally feel may be safe for me to begin to look into and find some stock ideas. So I know that regardless of what happens economically, just as Doug McMillan had shared yesterday, a position in Walmart might be pretty wise. That's a consumer goods sector investment opportunity. I want to see what else is within the consumer goods sector. And I also know that regardless of whatever happens, healthcare is always a pretty solid sector to be invested into. Why? Because regardless of what's happening economically, everybody wants to live a healthy, longer life. So here we are. We see this list that is continuing to filter But we can go even deeper, and I recommend that as you look for your stock ideas using a stock screener, you get as specific as you can. But just for the sake of today's webinar, I want to see if any of these stocks have a bullish blogger sentiment. We see this list will continue to filter. And for the sake of today's webinar, let's go over to hedge fund activity. We can see if any of them have positive hedge fund signals. So now I have a filtered list here of stocks based on my inputs that I can run with. Anything from Amazon, Tesla, Alibaba, Toyota. Continue to scroll down here. TJ Maxx, Estee Lauder, so on and so forth. But I now have a stock list right in front of me of stock ideas. Now, I know some of these bigger players like Amazon and Tesla, they could be pretty exciting, but let's just keep this economic backdrop in mind. And if I'm going to be in a rougher position economically in the next 6 months to 12 months, and perhaps I'm someone out there that's going to need some clothes in the next 12 months, it may be a company like TJ Maxx that would be interesting for me to look into. And we can see what's happening in TJ Maxx. Go back. They've been experiencing a tremendous amount of upward trend here, which makes sense. Again, going back to our economic backdrop, why it's always important to paint that economic backdrop, because we have been in a state of flux economically, I would say, for the last 12 months. And we can see that a company like TJ Maxx has actually been performing quite well, regardless of what's been happening economically. Even though consumers are pinched, TJ Maxx is a store that consumers are more likely to go to than, say, some of these luxury brands that we may have, maybe Louis Vuitton or any of these other companies. Even if we were to look at VF Corporation, which is more Timberland, the North Face, and we can just see in comparison. And there you are. So again, TJ Maxx is a clothing store that you can go to, of course, to get clothes at a discount. And it makes sense for us to look at TJ Maxx and then have it be reflected against what is going on economically. Now, on our right-hand side, we do have some signals here for us to even look at. So TJ Maxx has a TipRanks Smart Score of a 9, 8, 9, or a 10 based on 8 factors that we have here at TipRanks, means it's likely it could outperform the market. Looks like we have strong buys coming in from analysts, bullish blogger sentiment. That was actually a piece of the criteria that I had on my screener. And of course, another piece of criteria that I had was increased hedge fund activity. Now, I do want to take you guys back over to research tools, because there are some other unique screeners here that we have to take a look at. And I want to direct your attention to top online growth stocks. Now, this list that's about to populate is going to be all the stocks that we have in which is connected to website traffic. So if we see here, top online stocks, we can keep it by stock, or we can go by domain, which is going to be the actual website that people are flocking to. And we can begin to filter out by domain unique visits to these specific domains or websites. Now, again, why is that important? Because when people are looking online, if we use Amazon as an example, when people are looking on Amazon, they go to Amazon because they're interested in making a purchase of some product. Now, when they're on Amazon, hopefully they check out, they transact with Amazon, and at the end of the day, Amazon doing well in terms of reporting solid revenue earnings is going to be reflected in that stock share price, ultimately for me as an investor. But back over to research tools, and we have anything from a penny stock screener. If investing into penny stocks are your thing, here you go, the perfect screener for you. Again, a list of stock ideas. This is really where our due diligence begins. And I will take us back up to research tools here. And I want to go to one more, which are top smart score stocks. Now, as I mentioned, TipRanks, based on 8 different factors, has developed a smart score. So 8, 9, or a 10 of a smart score on TipRanks means there's a very, very high likelihood that the stock could outperform the market. And again, that's based on a long-term outlook. But here we are with Smart Score 10s across the board in interesting stocks that I may want to add to my watch list. And again, this is where I begin my due diligence as an investor, because even if a stock says Smart Score 10, it does not mean it is a buy. It means it's a great stock that we can add to our watch list and then begin our due diligence. And we will just use Apple here for the sake, the introduction of a brand new tool that we have that is just rolled out on TipRanks. So here we are. We know Apple, along with all these other tech giants out there, has been experiencing a tremendous amount of pain. We have interest rates that were hiked. We have a lot of tech companies that have been laying off their employees with these layoffs. And Apple is right in the mix of a tech company, a growth stock that has been hit. And we can see it is down here almost 10% on the year. Now, for me as an investor, especially as a long-term investor, I actually prefer seeing red. My green flag goes up as an investor, and I begin to look at other signals here on TipRanks. I like to see that TipRanks Smart Score of a 10, of course, but that is not an indication that I should immediately buy. It just means that it may work in my favor, and it may be a good stock to add to that watch list. Now look at other signals and continue on with my due diligence. We have bullish blogger sentiment, increased hedge fund activity, and it looks like we have some pretty solid news sentiment coming in. Interesting to note, insider transactions are actually down here, meaning we have insiders that sold out of the position. But let's get to this brand new feature here on TipRanks. And I want to share with you all that this brand new feature is all due thanks to each and every one of you, because TipRanks has certainly been listening in response to all the requests that we've gotten from our community members. I want to introduce you now to technical analysis on TipRanks. So this provides a very easy to understand technical signals like moving averages. We have pivot points, levels of resistance. Bear with me as I scroll. Levels of resistance and divergence. Now, I must admit to each and every one of you that I am not the biggest technical analysis investor. I'm a fundamental analysis investor. However, for those of you interested in technical analysis, we have all the tools now for you to utilize on TipRanks. And I must share with you transparently that ever since TipRanks has rolled out this new feature of technical analysis on TipRanks, I have certainly been exploring more and more. And I do know that as an investor, whether it's fundamental analysis or technical analysis, the two really do go hand in hand and complement one another. Now, something that's very unique to TipRanks, right underneath our summary of our indicators, I want to take everyone to our advanced chart. Now, here we are on our advanced charting. And what is very unique to TipRanks for our community members is to actually add in the events that have taken place and put them right on the chart that you need to be looking at as an investor. So whether it's when it comes to Apple specifically here, dividends, earnings, ratings, or insiders, we can now actually plot what has been happening and piece together, again, a trend for ourselves as an investor. So for the sake of today's webinar, we will click on insiders. And we can also click on ratings. But just to show everyone here, we had some insider activity. If we simply give that one cell a click, we can see who exactly sold out. And then we had 8 insiders buying in. So insider activity is essentially a stakeholder of Apple, a major stakeholder of Apple, or an insider. Perhaps somebody who is on and sitting in that executive seat, whether it's a CTO, CEO, but anybody that would have information that would be useful for us as investors. As I always say, investing along with the insiders is ideal simply because they do have information that all of us do not. That information is at their fingertips. So when they buy or sell their own positions within the company, interesting to note and interesting to then ask myself deeper questions as an investor. Why did this particular insider sell out of a stock or actually buy into a stock? Again, going back up to events, we also get all of the ratings now put right on the chart for us. And if we click on the buy, we can see which analysts rated a buy. We have a hold rating here, which analysts rated a hold. Now, I will share with everybody that just because an analyst rates a buy, a hold, or a sell, I always go the extra mile in trying to understand who exactly that analyst is. And you may see a lot of buys, sells, or holds here on the chart. But if you're going to look into analyst activity and who these analysts are, your best bet is actually going to be leaving your advanced chart, coming over to analyst forecasts on our left-hand side here, and then scrolling down to the best analysts that are covering the stock. Because I don't want just any Joe Schmo analyst telling me that he's rating a stock a buy or a sell. I want to try to invest with the best, especially when I have that data at my fingertips, which TipRanks allows us to have at our fingertips. Looking at the most profitable analysts here, or the most accurate, I now have a solid list of which analysts I should be following or listening to when it comes specifically here to Apple. And we can see that across the board. When it comes to at least 1 month, the most accurate analyst is Daniel Ives. To our right-hand side here, we have the best analyst for a 2-year window, Jim Suva. So I can give Jim a look and do a deeper dive now on Jim. What I always like to do is actually scroll down and see when Jim actually last rated Apple. Click on that drop down. And here we are now with the buy ratings specific to Jim and specific to Apple. And I wish to share with you that it would not be a TipRanks webinar if I did not say that we do have an email being sent your way as we speak for each and every one of you to then go ahead and utilize these TipRanks tools as we roll into what I very well foresee as an uncertain year that will be unfolding. And I share that just based off the fact that even the Federal Reserve Chairman himself, Jerome Powell, foresees that bumpy road ahead. CEOs across the board have been sharing with us the exact same rationale for why they see more pain economically for us. And the question that I pose to each and every one of you is, as investors, with the information that we now have available to us on TipRanks, what are we all going to do with it? And hopefully that is investing wisely, remaining informed. And I'd like to thank you for joining me here on today's webinar. I look forward to seeing each and every one of you next week. Thank you so much for joining me today, and have a fantastic day worth of investing.